Hello, fellow traders. 'Tis I, the Rumpled One. It is September 11th, the year 2018. A somber day. But let's talk trading. Micro, macro. What the heck is that? Now, there's a video that I like to show people who haven't seen it called Ghetto Physics. And one of the topics, he talks about the law of octaves, or as below, um, as above, as below, meaning in terms of trading, what goes on the tick chart, 1 minute chart, it's the same thing that goes on the weekly, monthly chart. I mean, you'll get the same patterns, same things. So a lot of times people go, what chart period's the best chart period to trade? I go, number one, you're not trading chart periods, you are trading price. And price is the same on all chart periods. I mean, I believe when I show you my charts, I take you from the monthly all the way down to the tick chart. So we can look at price, because that's what we're focusing on. Price, what's it doing? So in other words, you get an inside bar type trade or a turn trade on the monthly or weekly or daily. Well, the same thing's going to happen down on the 1 minute chart or the 5 minute chart. So you look for things that you can exploit. We're talking about, what was it, methods, systems, strategies. And I said, kind of like Bruce Lee, I don't have a system. System, no method. Because that's not what it's about. It's just about trading what you see and exploiting the possibilities. So we can look here at the money and risk management. How do we exploit possibilities using money and risk management? Well, we make sure we don't go bust. We make sure that we employ stop losses to prevent big losses, or we employ stop losses to protect profits. It's that simple. It's not difficult. Okay, we are into the candle body here of the euro yen. You can see that 36 above. And then we look at the weekly. We're in the upper wick zone. Close. We had a nice high 129.81. Got close, but pulled back. Closed to opens 106 pips here on the week. Nice move. And once again, those of you just tuning in, the weekly gaps have filled. On the daily, you see we broke through. Here's a nice turn trade, even though it's not at the bottom. You see here we had this kind of a long candle, another one there. Price wants to go back to those areas. So you see here we had a breakout of the previous day's high, or a breakout of the wick zone. Nice 105 pip range today versus 54 on dollar yen. And 1, 2, 3, 4, 5, 6, 7, 8 pairs with range over 100. It looks like these pound pairs are really moving. I don't know if anybody out there likes trading the pound pairs. Let me know. So you see this pattern here. I've told you about it before. And you can see it here on the 1 hour chart. Red, green, followed by a green. So right here on the daily, see we missed the pivot, never even triggered a short. One long trigger there. This one's a pro trader. You see here it hit the daily open, reversed. You could have jumped in here, and then you see where it hit. And if any, I don't know how many VWAP traders we have out there. You can see here how price, when it came back to the open, price usually likes to find its way close to the VWAP, the volume weighted average price. Now, normally VWAP is a squiggly, But you know how I feel about squigglies. And what back here, VWAP doesn't matter. All it matters is the current VWAP level, because that's where price is going to head to. And you can see here, rat traders were rewarded nicely. Red rat, green rat, it dipped back in, gave you a second chance. And once again, you see a big candle, then a turn trade opportunity, red, green, and you see here prices coming back and filling in that red candle. And you see it happen here. It happens a lot with the big candles. And you see here you had a big green candle. What happened? Turn trade filled in. And that's part of the return candle. I guess I should put that screen up. That reminds me, I'm supposed to put up some of the frequency distribution. I'll have to remember that for either tomorrow. Let's see, yeah, tomorrow or the next day to do that for you guys, so you can see the frequency distributions on euro yen. And as I said, we missed that pivot, but we took out the weekly pivot and the monthly pivot already. So you see here we have a missed pivot here and another one here. And on the daily, once again, you see that long candle. Took it a few days, but it came back the other way. And price action. One ball at the bottom, green at the line. Three ball at the top, red at the line. Two ball at the bottom, green at the line. One ball at the top, we haven't had a red at the line yet. So once again, simple price action trade. I mean, here we had, that looks like, well, we'll just wait till we get to that screen. Once again, breaking through the high using the H1s, the previous day's high, that is, previous daily session. Right there, you can see. Also a couple little shorts there. Right here, didn't quite make it. These would have either been scratches or losses to be made up going the other way. Wick zone, once again, price doesn't like staying in the wick zone. It's a broken record, right? Holo setup. There, you see it came back, dipped back down. It gave you that opportunity. And here we have the inventory reduction bars. We had a short trigger here. And a long trigger here for just a few pips so far. Another short trigger. Another short trigger. The previous daily, weekly, monthly open, high, low. Once again, just trading at the line with the candle color direction. Prices crossing the line. It's not difficult. Looking at the tick chart, you can see here we had the ask get below the bid peak. There was some selling. Then you see here the bid came up above the peak, or rather the valley of the ask. But you see here the ask didn't get below the peak, so price continued up. I think I was talking about that yesterday. So you see here, even though price came down here, it didn't come down low enough for selling to start. And so then buying, so this was a waiting, then buying started. And so that little run was good for about, call it 4 pips maybe. But that's just playing at the tick level. And we use this tick level to time entries So if you see something on a different time frame, you can time your entry using the spread dots, which is the same as this tick level here. And then looking here at the Einstein line, you can see when I cranked it up, and there was a long trigger that didn't work out. Now we're having a short trigger. But price is going to have to move away from this line for many, many pips, either one way or the other. I don't think it's just going to waffle between 0.27 and 0.32. And you can see here, Randy real time, it's going down. So once again, this is the micro level here. We go back to the daily, talking about macro level, macro, the bigger levels. But the patterns are the same. You can trade the same. You can use the same lines. Doesn't matter. And the reason it doesn't matter is because it's not what you trade. It's how you trade it. So let's continue the draining of the banks.